Canton Network has been flying under the radar for most crypto folks, but it's quietly becoming the backbone for the kind of institutional finance that actually moves trillions. And with DTCC tokenizing treasuries, JP Morgan bringing their JPM coin natively in phases this year, and that fresh industry working group demo just last week showing expanded 24/7 global collateral mobility. The momentum feels like it's shifting from pilots to production in a big way. Canton is a public, privacy-enabled Layer 1 blockchain purpose-built for regulated finance and enterprise. Created by Digital Asset with their Damble smart contract language at the core. It delivers programmable privacy right at the contract level. Participants only see the data they're entitled to, keeping sensitive details hidden even on a shared network. This solves huge problems in traditional markets like settlement delays, manual reconciliations, and privacy leaks when sharing info across banks or custodians. It's open and permissionless in structure, but governed with controls that institutions demand, making it perfect for tokenized assets, cross-border payments, collateral management, repos, and interbank coordination. The native utility token, Canton Coin or CC, covers network fees, incentivizes validators and participants, rewards real usage over speculation, and plays into governance through the Canton Foundation. Every CC is earned based on contributions rather than pre-mined dumps, and recent tokenomics updates have shifted toward Oracle-driven dynamic pricing, removed certain liveness rewards, and focused incentives on meaningful activity to make it more sustainable and market-aligned as adoption grows. Right now, it's trading around 15 to 16 cents, with a market cap in the mid to upper 5 billions, putting it in a strong spot among RWA-focused projects. Network metrics tell the story of serious, high-value activity rather than retail volume spikes. While it's not broadcasting millions of daily transactions like consumer chains, the emphasis is on quality, multi-million or billion-dollar equivalent flows in tokenized securities, repos, and collateral. The global synchronizer keeps everything interoperable and synced in real time, with privacy intact. Recent working group tests have demonstrated intraday repos using tokenized deposits as the cash leg, cross-border multi-currency trades, and 24/7 mobility that traditional systems can't match. TVL in tokenized assets and locked collateral continues climbing as more firms move from testing to live environments, and the burns or reward alignments tied to usage help create deflationary pressure when activity ramps. The catalysts in early 2026 are stacking fast. Just on January 15th, the industry working group, now expanded with Euroclear, Euronext, LSEG, Treasury Spring, Cumberland DRW, Societe Generale, TradeWeb, and Virtu, completed their third round of live transactions. They showcased expanded 24/7 global collateral mobility, including repos settled with tokenized deposits from LSEG's Dish platform instead of just stablecoins, proving seamless cash legs in on-chain financing. This builds directly on earlier U.S. Treasury pilots and signals acceleration toward always-on capital markets infrastructure. DTCC confirmed their partnership to tokenize a subset of DTC-custodied U.S. Treasuries using ComposerX on Canton's privacy-preserving L1 with an MVP targeted for the first half of the year. Huge validation from the post-trade giant handling quadrillions in securities annually. On January 7th, Connexes by JP Morgan announced a phased rollout to issue USDJPM coin natively on Canton throughout 2026, enabling 24/7 digital settlements and potentially broader integrations like blockchain deposits. And Nasdaq joined as a super validator under CIP 0097, adding milestone-based weight to strengthen decentralization. Swiftex, listing in Australia, opened retail access, and Digital Assets' earlier funding round keeps fueling expansion into hundreds of billions in RWAS like bonds, money market funds, repos, and annuities. This ecosystem is enterprise-grade through and through, Consensus-level tooling isn't needed here. It's DAML for composable, privacy-safe contracts, interoperable with existing systems, and backed by the Canton Foundation for transparent governance. The focus on pragmatic privacy is unlocking what banks and custodians have wanted for years: real-time atomic settlement without exposing positions or client data. With participants like DTCC, JP Morgan, Euroclear, and LSEG driving transactions, it's positioning Canton as the settlement layer for tokenized real-world assets in regulated environments, where privacy and compliance aren't optional. Want to trade Canton and a ton of others? Check the link below to Weex. It's a fantastic platform with a great rewards program. Their liquidity is deep, security is excellent, and trading fees are competitively low. Bonuses include $100 for subscribing to their Telegram, as well as futures bonuses for depositing and holding cash. Check the link and let's continue the video. All these institutional moves point to utility-driven growth that's less about hype and more about solving trillion-dollar inefficiencies. Near term, over the next 3 to 6 months, if DTCC's Treasury MVP launches on schedule, JPM coin phases start delivering flows, and the working group rolls out more on-chain financing demos, CC could build real momentum, breaking through recent resistances as usage rewards and burns tighten supply amid growing activity. If tokenized volumes scale and more heavyweights integrate, stronger multiples by mid to late 2026 seem grounded, especially as RWAS becomes standard plumbing, and Canton's privacy edge draws even more capital. But let's keep it balanced. This space moves on institutional timelines, not retail pumps. Risks include delays in big pilots like DTCC's MVP or JPM's rollout, which could stall sentiment and push CC back to lower supports. Competing networks or slower regulatory green lights for tokenized securities might divert flows elsewhere. If working group activity quiets or transaction proofs slow in updates, that could signal adoption isn't accelerating as hoped. Volume needs to grow consistently from these high-value deals to sustain upside. Broader crypto weakness or macro headwinds could hit it too, since it's tied to TradFi sentiment. At the end of the day, Canton is a relatively new player, but it has the bones to build up to something massive if things go its way. It's engineered for the quiet, massive infrastructure shift in finance toward privacy-preserving interoperable tokenization. With DTCC, JP Morgan, and that growing consortium executing real transactions right now, the fundamentals are aligning for those who play the long institutional game. Dig deeper yourself, position accordingly for the slower but potentially steadier build, and watch those 2026 milestones closely. They're the ones that could flip the switch from promise to payoff.